walk you through a little bit about our group and the Lumina Gold Company. We're focused in Ecuador. We have one of the largest gold projects in the world, but the largest primary gold project in Ecuador. So that's mainly what I'll be talking about today. So the Lumina Group, we have a history and track record of advancing large projects and selling them on to companies that are looking to build these large projects. So you could see here, these are all past companies that have been sold. Our group was founded by Ross Beatty, so he's the main shareholder in all our companies, and our technical team has been working together since about 2004. So historically, we've raised about $275 million US of capital and returned, over $1.6 billion to shareholders during the time the group's been together. So the strategy with Lumina Gold, the current company I'm talking about, is really the same. Advance the project, find a large-scale resource, and then look to sell the company to a large-scale producer that would like to build it. So Cangrejos, this is the main project in the company. We have about a 17 million ounce gold resource at the project right now. This makes Cangrejos a top 15 global gold development project. So we just updated a PEA in 2020 that brought in a satellite pit and all the additional drilling we've done between 2018 and 2020. This showed that the project has a very long life, about a 25-year mine life, very large production, about 370,000 ounces per year on average. Good cost profile, about $600 an ounce would be the cost to produce on an all-in sustaining cost basis once you deduct the copper credits. The asset's about 80% gold and 20% copper. So I know a lot of investors like that it does have, both of those commodities in it. At a $1,400 gold price, the NPV of the project was about $1.6 billion. If you went 20% higher to $1,680 an ounce gold, the NPV goes from 1.6 billion to 2.5 billion. So substantial amount of leverage to the price of gold. This project has excellent infrastructure around it, which I'll show you in a bit. And our management team has been working on this for about 6 years now. So why should you buy Lumina Gold? Well, we think that both development stories in the gold space and Ecuador specifically have been, lagging what we've seen in the producers. And we think, this is going to catch up. So if you go back to January 2017, we had 4 million ounces in the ground. We had about $184 million market cap. Since then, gold's gone up about 60%. Our market cap's only gone up 50%. And during this time, we've increased our resource base by 400%. So, we've had a dramatic increase in the resource. We've advanced the studies, but we still feel like there's this value disconnect for the stock. And we think that's one of the most compelling reasons to buy it right now. The structure of the company, we're sitting at about, just over a $300 million Canadian market cap. As I mentioned, Ross Beatty, the founder of the group, is the largest shareholder at 20% of the company approximately. Management holds about 10% of the company as well. So we're highly incentivized and aligned with shareholders from that perspective. We have 3 different research operations covering us. We have Haywood, Raymond James, and Fundamental Research, and you can see the price targets there at $2 from Haywood, $1.60 from Raymond James, and $1.35 from Fundamental Research. We're trading at about 88 cents today Canadian. So obviously the market's moved since this presentation was put together. Ecuador. For those of you who don't know much about Ecuador, it really has changed a lot since we've started working there. We've seen 2 governments, both of which have, increased the support for mining. We've seen 2 large-scale mines come into production there. We've seen Fruta del Norte get constructed, which is owned by Lundin Gold, and we've seen the Mirador mine, which is owned by a Chinese consortium, come into production. That's a large copper gold mine. So now with these 2 large-scale mines, we really feel that the country has demonstrated that it is an emerging mining jurisdiction. They've reduced tax rates there. They've reduced the royalty rates there. And you can see all these logos on this page are companies that really have come in the last 5 years into Ecuador to look, to explore, and to spend money to develop a mining pipeline there. And the government is very focused on having mining become a bigger part of their GDP as they diversify away from oil. So the Cangrejos project. So we are down in southwest Ecuador. We are right on the coast. This project has some of the best infrastructure of any porphyry deposit that you'll look at. We're 40 kilometers from a deep sea port, and that's important because you would ship your copper concentrate out of there. You can bring in construction materials into the deep sea port. We're close to an airport. We're close to 2 population centers that can provide a workforce. We have hydropower to site, and Ecuador has lots of available cheap hydropower. So just like we enjoy in BC here, this is a very key component for these large scale mines. We have roads almost to site, and there's ample water there for operations. So as far as infrastructure goes, you really have all the pieces you need for a large scale project like this. So these are the common questions we get asked. You say it's a big project. How large is it? This is the 37th largest primary gold asset in the world right now at any stage, production, development, doesn't matter. It's the 14th largest undeveloped primary gold deposit in the world by production capacity. So we think that's important for when majors are looking to replace reserves and get these large chunky assets that offer fairly big production profiles. What about the grade? So it's a larger, lower grade deposit. That M&I grade is 0.73 grams per ton gold equivalent. We think about this more as a large copper porphyry type project. So it would be, higher grade than Cobre de Panama that First Quantum just built, higher grade than Mount Milligan, which is operating here in BC, similar grade to Red Chris, which Newcrest just purchased, operating here in BC. So these large scale, lower grade projects are getting built because they offer the size and mine lives that people are looking for. What about the CapEx? It would be about $1 billion to build this project. That would be similar to the 2 mines that have been built in Ecuador. So people are deploying this type of capital to build these projects in Ecuador. How advanced is the project? Well, the main pit is at a PFS level. The secondary pit is a little bit behind work-wise, so that's why we elected to update a PEA instead of going straight to a PFS. But there's been, substantial amount of work done on this project, and it is very well advanced. This is a summary of the grade and the 17 million ounce resource and the 2.2 billion pounds of copper between indicated and inferred. The nice thing about these open pits is that they have a very low strip ratio, which helps on the operating costs, and they're homogeneous. So you can operate these at a higher cutoff grade if you choose to, without losing too much of the contained metal in the resource. So it is a very large, homogeneous resource. So these are the 2 pits that are in the PEA. There's the main Cangrejos pit you see in the bottom right here, and then the Gran BESTIA pit you see in the top left. The Cangrejos pit is at a PFS level, as I said, and then the Gran BESTIA pit is what was a little bit behind and needs a touch more infill drilling to bring it up to a PFS level. These deposits are still open at depth. They're still open to the west and to the northwest. So this red line through the middle is the cross section. I'll show you on the next slide. So these pits you see here, the gray pit is the old PEA we had out in 2018. The blue lines here that show the 2 pits are the new PEA on the larger mine plan. Now, if you look to the far left on the northwest side, this is where we stopped drilling. So the last vertical hole on the ridge line up there is where we stopped drilling. You could keep going to the northwest, and we believe you'd find much more mineralization, but we had to pick a point to cut off and progress our study. So this is where we stopped. We obviously thought at 17 million ounces we had more than enough material here for the project that we wanted to pursue. This is a summary of some exploration that we had looked at. We flew airborne geophysics over the whole property, and really what it showed is this anomaly you see right in the center there. You can see BESTIA, you can see Cangrejos, and what it shows is that there's a lot more potential to drill in this district, in this area. The green circle there is soil and rock anomalies at surface above 0.25 grams per ton gold. So we think that for somebody who might be looking to acquire Lumina Gold, there's a lot of upside here in the future to find more as they develop the project. This is a summary of our PEA study and really, you know, the value of the project. So what you can see in the bottom left there is the capital and the stages of the project. So for the $1 billion I mentioned, you could build this project and bring it up to the 40,000 ton per day level. So it's quite large. And then you'd look to expand that to the 80,000 ton per day level for an extra $450 million that you would fund through cash flows by year 6. And once you've finished that expansion, you'd be producing almost 400,000 ounces of gold a year and about 50 million pounds of copper a year. So that's kind of the opportunity that we see for a major coming in. As on the grade, you can see the grades that we run through the mine plan are higher than what you see in the resource. So we run a 0.76 gold resource in the first 5 years and 0.14 copper. So almost, you know, 1 gram per ton equivalent in the first 5 years. And then when BESTIA comes in later in the mine life, it's a bit lower grade, so it brings the averages down a touch on the grade. The cost, you know, it's $600 an ounce. This is a key component of the project. So you've got a low strip ratio that's driving the cost. That's so important. A lot of people miss that. You've got low hydropower costs in Ecuador, you've got cheap diesel costs in Ecuador, and you're so close to all that infrastructure I discussed already. So at $1,400 gold, it's a 16% IRR project. At $1,680 gold, it's a 22% IRR project. And you know, obviously we're well above 1680 today. I think we're about 1880 as I'm speaking. So you know, we feel that the value of this project is very substantial. This is a summary of the products we'd make and the recoveries from the project. I won't spend too much time here, but the gold recoveries are 82%, the copper recoveries are 84%. The project would produce a gold silver doré bar, and it would produce a copper gold concentrate and a little bit of a molybdenum concentrate. So those are the 3 products that you would sell. And again, it's about 80% gold and 20% copper by revenue. This is a site plan and what we envision the project looking like here. You know, the kind of key things I'd point out is the 2 pits that you see that we looked at earlier. You build a primary crusher at 80,000 tons per day right away, right next to these pits. You'd have an overland conveyor to the plant site. You've got 1 waste rock storage facility, and then an overland conveyor to a dry stack tailings facility. You know, we think this is the way the industry is going. We're trying to get ahead of it. It also tightens up the footprint of the project, and we think makes permitting easier, going with this dry stack tailings facility instead of a conventional wet tailings facility. So we think this will help progress the project forward. This shows you where Cangrejos sits amongst all the primary gold development projects in the world. So they can produce over 250,000 ounces a year. So the blue bars are ones that are controlled by large cap or mid-tier producers. The yellow bars are ones that are held by developers, and we think, you know, are potentials for takeouts over time. Cangrejos is the 5th largest one that is held by an independent developer, and you know, we think if you look at the production scale it offers versus the capex, it benchmarks very well. When you start to look to the left at these larger projects than Cangrejos, you start to get, you know, into the $5-6 billion capex ranges, and we don't think those are the type of projects that are going to get built right now. We think our type of project and smaller capex projects are the ones that companies are looking to build while still offering long mine lives and large production capacity. This is a quick snapshot of, you know, that the discount I was talking about earlier with Ecuador. You know, Ecuador is the developers traded about 0.35 times PNAV right now versus the Western peers that traded about 0.6 times. So, you know, we think this is an opportunity for all the Ecuadorian companies as the country continues to mature, we think this discount will get reduced over time. So it's about a 40% discount right now, which is just too large. This is another way to say the same thing, that we are undervalued. You know, when you look at ounces in the ground on a gold equivalent basis, and you look across the peers, developers trade about $80 an ounce on average. We're currently trading at $11 per gold equivalent ounce in the ground. So for such a large scale project, you know, that has all these benefits I've discussed already, you know, we think this is extremely undervalued. Lastly, but very importantly, you know, the work we're doing in Ecuador around our project is crucial as it relates to the community and permitting and advancing this project. You know, a lot of our area had been previously cleared by farmers for grazing cattle. We've done some reforestation efforts. We have education programs in the community. We have entrepreneurship programs in the community. And we've been very involved in health screening and monitoring, and especially during this COVID crisis, getting out in the community, delivering food and medical supplies that are helping our local community. And we think this relationship is so important as you try to develop these type of projects. So in summary, you know, since we put out our last study in 2018, we've drilled 40,000 meters. We've doubled the size of the resource again at the project. We've improved the engineering and the metallurgy. We've put out a new study that shows that it's a fantastic project at $1,400 gold, and obviously we're well above that. We think that, you know, Ecuador and these development projects have flown under the radar, and that, you know, we're not getting the valuation we deserve in the market. And, you know, we think that with our track record as a management team and our ability to sell companies, this is an investment that you should look at, because you've got exposure to increased prices in gold, you've got exposure to a potential M&A premium, and an emerging mining jurisdiction that's only getting better. So with that, I'll take some questions if there are any.
Thank you, Scott, here. And there's a few questions that are lining up. The first one from Marx is that what do you need to do next to go to the bankable feasibility study?
Sure. So in our PEA, we laid out a $12 million program, which would be about $5 to $6 million of drilling, mostly at BESTIA for infill drilling, and then $5 to $6 million for study. So, you know, that could be done. Our management team thinks that, you know, we've advanced the project enough that, you know, any major that would come in and want to buy the project would probably want to look at the PFS through their own lens and through their own management team's process for doing these type of projects. So, you know, we're pursuing the strategy of sale versus the strategy of going to a PFS right now, but we certainly have the capability to execute that if that's the way we decide to go.
Okay. The second one, can Lumina Group be a good takeover target for the majors? What do you need to do in order to become one?
Yeah, I mean, I think we're pretty much there as far as the work that's been done. You know, we've obviously demonstrated a large resource. We've de-risked all the major areas, you know, metallurgy and geotech work. I mean, the whole list, we've gone through all the high risk areas of these type of projects and feel like we've de-risked it. So, you know, currently there's a handful of gold players in Ecuador. There's more copper players than gold players right now. So for us, it's getting, you know, the next kind of large gold entrant to come into Ecuador who wants to look to build our project. But we think we're there, and we're at the stage where, you know, we are an appealing takeover target now.
Good. The last question from Diana Meyer. He was asking about your stock being very undervalued compared to some other gold peers. Is that the copper being underappreciated here, or what's your thoughts?
You know, it's a tightly held story. Obviously, you know, a lot of the group had put in our own money over the years, and I don't think we did a good enough job generating the retail interest and following. And, you know, when we were having some of our best successes in 2017 drilling, you know, it was a market where people just didn't care. I mean, we put out, I remember a 200, you know, meter hole, or intercept, I should say, of 2 grams per ton gold and 0.3% copper. And I mean, that type of hole in this market today would, materially move the stock. But in 2017, I think we were only up, say, 5%. So, at the time we were having our success with the project, it was a tougher market. And, now I know there's a lot of stories, and I know you guys as investors hear a lot of different stories that are coming out these days. So, from our perspective, we're just trying to re-engage with investors and get people to see the value at this project, because we do think it is an extremely valuable project.
Okay, thank you, Scott, for your time here today.